Welcome back, everyone. Thank you very much to Olivier for his presentation, and a personal thanks very much to Evie, my teammate on Retail Banker International, for chairing the earlier session. I'm delighted to be joined now by Ken, John and Michellina, who will take us up to lunch and the networking session. General topic of the session is looking at banking as a service. But I'm sure we will broaden that out as the discussion progresses. You'll see, John, on the screen, we've got one or two technical fun and games and challenges to hook up with Michellina and with Ken. They will be with us shortly. I know they're there. We're just hooking them into the session. Meantime, just two very quick reminders, as I said earlier on, at the start of the day, to connect with people, use the tab on the right-hand side of the screen for one-to-one virtual face-to-face networking. Select the networking icon on the left of the screen, and at any point during this session or other sessions, please use the chat window to fire some questions at our panel members, or email us at awards@meed.com. Until Ken and Michellina join us, can I introduce John from UBX? John's the president and CEO of UBX. John, give us a quick introduction of yourself and your company, what UBX does, for whom you do it, why do you do it? I know you're doing it blindingly well for 150 banks, but in case anyone out there doesn't know UBX, give us the story.
Yeah, sure. Thanks. Well, first of all, thanks, Douglas, for having me here on the panel. It's a real honor and a privilege to be with everybody today. UBX is the technology innovation and corporate venture capital arm of Union Bank of the Philippines. We're a separate entity. We were spun off from the bank. But the heritage with the bank is important. Union Bank of the Philippines has been on a digital transformation journey for over 5 years. And while they have their roots as a traditional domestic bank here in the Philippines, the bank is now digitized to the point where you can interact with Union Bank completely digitally. You can open an account through the app, both as a consumer and as a business. There's actually no need to go into a physical branch. And the bank itself has leveraged that digital transformation to, for example, like I said, they're a traditional bank. They have branches and whatnot, but they've reimagined what that means and how the legacy, I guess, can be used in a new digital experience. But the reason we spun off UBX is we were, after post-digital transformation, we were thinking, what's next? What's next? The bank, while now digital, or at least the opportunity for customers to interact completely digital, the bank is still a place that you go to. It might be virtual. You might not go to a physical branch. You might go to an app on your phone. Or if you're a business, to our business app or to the website. But you still physically go to the branch. To the app. Virtually go to the app. So banking is still something that you go to. And we actually got a flavor of this at Union Bank, because as we created this digital experience of banking, we were building APIs and whatnot behind the scenes, and we were realizing that in a way we were making the bank programmable, and there was a way to embed the bank into the business systems or experiences of others. So we said, let's take that right to the extreme. What would it be like if we could make banking completely invisible and we could simply embed it into the activities and experiences that matter to consumers and to businesses? And in order to do that, we had a second observation, and that was that digital platforms, whether it's big tech like the Googles or the Facebooks, or it's emerging platforms like in Southeast Asia, we have Grab. kind of our version of Uber.
Digital platforms, whether it's big tech like the Googles or the Facebooks, or it's emerging platforms like where we have graphic.
Tapi itu dari situ ya.
Okay, slight technical difficulty. Thank you, Michellina. When we looked at, our observation was these platforms, these new digital platforms, whether they be big tech or emerging platforms, are acquiring customers and scale faster than traditional banks. And so our strategy was twofold. One was in our home market in the Philippines and probably elsewhere in similar markets in Asia, there still remains gaps in the digital platform space. So we looked at digitally and financially underserved communities or ecosystems, and we started building digital platforms to enable their business or their activities or experiences. The other thing we did, to support that, but also so that we could work with other platforms, is we started aggregating and virtualizing financial services so that we could embed them not just into our own platforms, but into the platforms of others. So that's kind of that's the why and the how, I guess, of UBX. And I know I'm cognizant that today's topic is banking as a service. That's the
why and how, I guess.
Or the
and I know I'm cognizant that today's topic is banking as a service.
Michellina, I think you need somebody on your end to mute momentarily while I speak. Yeah, sorry, it's a little hard to follow. I was just going to finish that when it comes to banking as a service, one of the ecosystems in the Philippines and certainly in some developing markets in Asia and elsewhere, I'm sure, is the ecosystem of financial institutions themselves. So in the Philippines, we have hundreds of regulated smaller financial institutions, and we have thousands of non-banking financial institutions, and they are both digitally underserved, and they are, believe it or not, even though they're banks or financial institutions, they're actually also financially underserved in terms of things like being connected to the financial payments network of the country and things like that. And so we've created a platform for the ecosystem of financial institutions themselves in the Philippines. And anyways, I just wanted to highlight that, Douglas, because I think that's the most direct link to the topic today, banking as a service. So we call that our Eye-to-Eye platform, and Eye-to-Eye is essentially an open banking as a service platform.
Perfect, thank you. So you've told us who you are, what you do, for whom you do it. Practical examples that come to mind that I think I've read about, correct me if I'm wrong, would be you've been helping Filipino business owners to access credit, helping institutions go digital, mobile ATMs, agency banking, digital credit scoring. Are all these accurate? Are there any important ones that I've missed?
Yeah, so no, it's exactly correct. We took a unique approach when we started our banking as a service. A lot of other case studies or ventures out there have, and it's not incorrect. They've started to, for example, build cloud-based core banking, and then they build off of that. We kind of went at it 180 degrees the other way. Our biggest observation was that a lot of these financial institutions we're excluded from the payment systems that the larger commercial or universal banks enjoy. And so our strategy was before we get involved into wholesale digitization of the entire stack, let's give them a taste of what digital transformation is like, and let's do that by first and foremost connecting them to each other and to the other banks in the country. And so that's exactly what we did. Now today you can go to the most remote branch in the farthest reaches of the Philippines, and in real time you can send payment or funds transfer to any commercial bank account that's connected to the nation's payment system through our platform. But some of the systems that you were alluding to, now that we have that platform, we have the delivery vehicle to deliver further digital capability and tools to these banks, such as, you mentioned mobile ATM. We actually have, through our technology partnerships, fully managed cloud-based core banking, agency banking. And so we're leveraging this platform to deliver that to these banks. You also mentioned the lending, and I'll finish on this one, but it's a good example of where the platforms we are building kind of cross-pollinate. So another digitally and financially underserved community in the Philippines, and I'm sure in other jurisdictions, is the community of micro, small, and medium-sized enterprises. Yeah. You know, in the Philippines, they represent over 99.5% of all businesses. They drive over 60% of the GDP, yet they receive less than 10% of the credit extended by traditional banks. And we wanted to change that. So we created a digital lending platform. We have a public marketplace for SMEs, but we embed it into the platforms that SMEs use. But what it really does, allows lenders. It allows, for example, these small banks that are on our i2i platform, it allows them to digitally reach SMEs across the country in a 100% end-to-end digital experience, and to expand their reach, but perhaps more importantly to the SMEs to get credit to a vital segment of our economy.
Thanks, John. Now, with a degree of trepidation, I'm going to try and hook in Ken from Alliance Bank, with fingers crossed. Ken, can you hear me? We can see you. Is your mic on?
Yes, I can. Can you hear me?
Brilliant. Thank you. Result. Ken from Alliance Bank. I love your bank's tagline. I think the last time I was on your bank website, it was quite simple. Building the best digital bank in Malaysia. Brief, to the point. I like it. And a good sign of any tagline, memorable. So big tick. Big respect. Ken, sorry about the technical problems. We just fired ahead so as not to waste time, and John has been manfully kicking off the session. Can you just give us a quick introduction about yourself, your job title, what you're doing at Alliance Bank?
Okay, so my name is Ken. I'm the head of Group Transformation Office for Alliance Bank. We predominantly look at our customers from the perspective of making sure that we continue to innovate for the future by disrupting ourselves. And therefore, we have actually started looking at core personas that will continue to be relevant to the bank, to be able to latch on to what John has just mentioned. We also look at serving some of the underbanked communities, one of them being foreign workers. And with that, what we did was that we came up with a solution to be able to address the employers and employees of the foreign workers market by ensuring and allowing what you call mass onboarding of the foreign workers, right? So they're only available at certain time for a limited time. If we follow the traditional approach of onboarding customers with account opening, it will typically take about 40 minutes, right? But you won't have that kind of time with the foreign workers because they are mostly production workers, right? So what we did was that we designed a process that allows them to be able to do mass onboarding. They follow a guided presentation that allows them to sit in the classroom style and allowing them to be able to download a mobile banking. And following the steps, they would be able to open an account, activate their mobile banking, activate their debit card, right? And immediately start using their account on the spot, right? So rather than take 40 minutes on a one-to-one basis, we were able to open 40 accounts in 40 minutes, right? So this is just one of the use cases with regards to us targeting personas and making sure that we are able to meet the needs of the foreign workers as well as the employers. by connecting the whole chain, ensuring that we are able to meet their needs spot on.
Thanks. I don't know if you were with us during the first session, but at the start of the day, we heard from HSBC, Standard Chartered, and RCBC, and it was very obvious that despite the challenge of the last 7 months, innovation hadn't stopped. Indeed, if anything, digital innovation was accelerating during the pandemic. I'm thinking of recent examples I've read of from Alliance Bank. You're branching a tablet initiative. You've been doing a lot in terms of enhancing the customer experience in the branch and outside the branch. Are there other digital initiatives this year that ought to be highlighted that you can share with us?
Shortly, we will be launching eKYC via mobile. So that is just around the corner. With the eKYC policy document that was just recently published by Bank Negara, June, I think. So shortly, you would see that we will come up with the ability to be able to onboard customers remotely, right? This plays into the strategy of us being able to bring both physical as well as digital together. Branch in the tablet as well as mobile banking or mobile first banking is really the core strategy for us to be able to provide seamless banking for our customer. So we do see what you call by making them one of the same. So you would have a mobile banking for our customers, and you would have a branch in the tablet for our customer-facing staff, right? So with this, if a mobile banking is a virtual branch that provides self-service banking anywhere, anytime, branch in the tablet provides assisted banking anywhere, anytime, right? So what we are trying to do is provide use cases that make sense for the customer. So you mentioned things like COVID and MCO, movement control order within Malaysia itself. What we have done is that one use case that makes a whole lot of sense that applies to this, where both mobile banking and the tablet can be used, is that our priority banking customer can be onboarded, and they can also interact with our relationship managers via the mobile banking app. So what happens is that user experience does not change fundamentally. They are still serviced. They may be on a call with the relationship manager, being guided through the product prospectus, being guided through the pricing, where should they be investing, and so on and so forth, right? And the RM, the relationship manager, will be using the branch in the tablet to be able to push notifications to the customer, right? Whether it is documentation needs, declaration, or even a product purchase, right? So it will come in the form of a push notification that hits the mobile banking app. And once the customer taps on the app, they can actually approve and also sign off on certain declaration that they may require to be able to conduct a transaction. And this is highly relevant in the sense that it allows us to be able to do things as what we term remote banking. Yeah, effectively having the customer being remote, and it's not appropriate for them to meet face to face. They will still be able to bank remotely with the service of their relationship manager, right? And on the relationship manager's perspective, with branch in the tablet, we do not need to be constrained to the four-wall confines of a branch, right? As long as you have a tablet, the vision is that anywhere you go with a tablet, there is a branch, right? And that allows us to be able to create new strategies with regards to not just onboarding customer at the branch or digitally. It is all the modes in between, like just what I've actually described to you, right? And we can also target locations, like going on premise to our employers, to be able to onboard the business owners, the employees, whether it's mass onboarding or it's actually one-to-one onboarding, all those can be facilitated, right? And it can also go to exhibition conferences that applies to that particular segment. If we are recruiting priority banking customers, we can be going to wealth management events. And we can set up a booth and quickly set up a branch with just the tablet alone, right? We can even set up a new branch concept as long as we have retailers, restaurants, transportation hubs, you name it, right? Effectively, we can actually set up shop with regards to assisted models of the banking, whether it is physical or digital. We are able to facilitate both, right? So that opens up a whole new game plan as far as Alliance Bank is concerned with regards to community by location, community in the digital world. We want to be able to address both and also be able to swap in between the two. So if customers are basically omni-channel, the bank also needs to be omni-channel capable, right? Because after all, we are serving one customer, albeit it is across multiple channels and multiple modes, depending on their use cases.
So while you are, the strategy is to be omni-channel and consistent across all the channels, it sounds to me as if you believe you can win market share, attract new customers, as well as retaining your existing customers by getting your digital strategy right. And that is not an easy challenge because you've got some serious players with whom you're competing. Some very good digital bank market players in your part of the world. So this is a big challenge for you, is it not?
It is, but I guess that we play to our advantage in the sense that we already have existing customers that we can create lookalike models for to ensure that we are able to address the customer needs, right? So first and foremost, we have an existing customer base. We play to our strength, and therefore the personas as well as the community that we address comes from mostly our SME customers, spreading into the consumer side of the business.
So in terms of segmentation, you've mentioned foreign workers and SMEs, mass affluent. That's a key. The professionals. That's a key segment for you that you're targeting. Correct?
Sorry, I have cross feeds. It's very difficult to hear your question, Douglas.
Let me try again. In terms of the bank's segmentation strategy, you've mentioned foreign workers, SMEs, professionals, the mass affluent. That's a key target, key segment of the market that you're targeting, I guess.
Yep, emerging affluent as well as affluent.
Okay. Any other segments that you can see customer wins?
These are primarily our core personas or core digital personas or core phygital personas that we focus on. So what we do is that it's not about doing a lot of things right. It's about identifying the persona segment and ensuring that we deliver the minimal viable product for them. And really the completeness comes from how do we handle all the exceptions associated with ensuring those use cases and the exceptions are all handled accordingly, right? So for that, we are not trying to be complete and launch a set of services that basically is a holistic approach. It's more of based on the personas, what are the moments of truth? What are the significant use cases that is important to the customers? And with the fastest possible time, we launch the minimum viable product, iterate, learn, and evolve. So the thing is that we would like the customer to tell us what to do or put the customer at the center of designing and shaping the bank to ensure that that bank is relevant to them.
Got you. Thank you. One of the newer words that appeared in the lexicon a good 6-7 years ago, I think I blame Accenture for this, but if it's not copyrighted to Accenture, my apologies to them, was phygital, a combination of digital and the physical branch. John, how can banks seamlessly integrate mobile banking with, albeit perhaps a reducing number of physical branches? Because for a certain age group, the branch remains important. Or even for younger customers, they may only need to go into the branch once in a year or 3 times in a year, but it may just influence their choice of bank, the reassurance to know that there is a physical branch in the city that they can go to if they need to.
Yeah, well, let me, great question. Let me kind of come at it from 2 different angles. I'll come at it from our banking as a service platform perspective, but maybe also leverage on the Union Bank experience as well. So digital, and maybe a little bit of background on the Philippine market. You know, the Philippines is famously unbanked or underbanked. You know, everyone's got a slightly different stat, but they all come in around 70%, either completely unbanked or without a bank account, and if not that, certainly underbanked. And so the reality is that the products and the products, you know, often have been designed for a branch-based distribution model, which is too expensive to hit certain segments of the country, and clearly the proof is in the pudding, not resonating with the 70% or whatever that unbanked or underbanked number is. And so digital is the great equalizer. So getting to a point where if it's not mobile banking, if it's banking or financial services that are embedded directly into the platforms that people use, like getting, you know, buy now, pay later, or consumer credit at the time of purchase, you know, that digital distribution and delivery will be the great equalizer, and it will allow the 70% to participate. However, it's not like you can just flick the switch and people are just gonna, okay, well, I've never heard of these guys before, but I'll just pick up my mobile phone and start banking. It's not like that. There's an element of trust. There's an element of, you know, we talk about know your customer, but for a customer, there's like know your institution, know your bank, right? Yeah. And so that's where the physical piece matters so much. So even though we're building a digital platform, the reason we targeted the hundreds of regulated smaller financial institutions and the thousands of non-banking financial institutions is because they actually have a physical presence in the local communities that they serve, and that is the offline to online ramp that we identified as so crucial to get people a taste of digital, trust in digital, and then they're on. And if you kind of roll the tape forward and you look at a more mature banking experience like our parent Union Bank, now, you know, once that's occurred and people are embracing the digital banking experience, whether it be through mobile or what have you, the branch can be repurposed. The experience can be completely different. So at our parent Union Bank, we have a concept called the ARC, and it is a reimagining of the brand. And if you go into one of our parent bank's branches, it won't look like you know, the typical branch experience that you're used to. You know, there's no paper. You don't go to the teller wicket or anything like that. We call them ambassadors. The ambassador comes to you. You might be drinking coffee or whatever, and it's a completely reimagined experience. That's I guess that's the conceptual. I mean, it's real, but I guess, you know, that's maybe the higher concept angle to it. But it also comes right back to practical reality, and that is that at the end of the day, until the world is 100% digital, we have, you know, just real practical issues like the ability to get cash into the digital system or out of the digital system, and so even if you are digital, it can be as pedestrian as things like that where your physical presence or your ability to have a physical presence actually augments your digital banking capability, either in a very strategic or, like I said, in a very pedestrian but so important way. Yeah.
And it would be fair to say, Ken, I think that you're seeing quite significant changes in consumer behaviour, in particular during the last 6 months, and the pandemic is probably just accelerating the way that consumer behaviour is changing. I think the stat that I recall from Alliance Bank in your last results was that as many as 60% of your customers now want to open accounts digitally. But you still have customers who will use the branches when we go back to normal. The branch remains important for the branch remains important, does it not?
Like any other markets that I think we have seen, branch continues to remain relevant to some portion of our customers, where it is associated with trust, presence, peace of mind, that you're always going to be there. If I have problems with my money, I will be able to fall back to someone I can talk to, or someplace I can go to. Or if I have problems with my loans, that applies, right? So we see that as a core to what we need to be able to do in terms of the channels that we are able to do this, right? But the issue with physical and digital was more of the ability of the physical world, where it is driven by human beings that needs to be trained, is driven by ongoing SOPs or standard operating procedures that keeps changing, compliance that needs to be conformed to on an ongoing basis. So if we could continue to have an accelerated speed for doing digitalization, the physical side of the channels for the bank will continue to lag behind. And that was why the strategy of doing branch in a tablet, where you centralize all the operations, compliance, the customer engagement, where you can also marry that to the self-service channels, where it becomes really a single customer view, allowing us to be able to transcend between whether it is a physical branch or it is a digital onboarding. That's why we're able to say customers who go online to apply for or open an account can finish and continue off that process if they prefer to go to a branch without having to do this all over again, right? So as I said, omnichannel is about serving one customer and not limiting it by channels, because there are different systems and there are different legacies that is in the bank. So the idea is, how do we converge that customer profile based on persona, so that we can market to them, we can interact to them, and we can fulfill their requirements on a basis where they can hop from one channel to another, without the lack of the between a digital channel as well as a physical channel, where we need to ensure that both keeps up with each other, so that we deliver consistent service to our customers.
How do you record a sale internally for customers that may do 80%, 90% of the work online, digitally, whether it's their tablet or a computer or the mobile phone, and then go into the branch at the last stage? Is that sale registered against the branch, or vice versa? If a customer may do an awful lot of homework and have discussions in the branch, and then actually complete the sale on a remote channel digitally, and that other banks and other markets at other times has caused some internal friction when branch staff think that their work isn't being recognised and sales are not being recognised for the branch channel. So how does it work at your bank?
What we do is that while this area is still underdeveloped for us even, right? But what we follow very closely is what you call attribution platforms that you see out there, like AppsFlyer, whether it is Adjust, Branch. These guys basically say who are the supporting channels and who are the converting channel, right? So that you know which are the point, which was the point where is attributed to, where they are the one that converted it. So in this case, in your scenario, when you say that they were engaged digitally on an ongoing, 80% of all the stuff that they do is there. But when they convert on buying a new product, they go to a branch, then so be it, because it is the customer's behavior that with a mortgage, I prefer to go to a branch to complete the transaction. And therefore, it also highlights that there is a place for branch to continue to exist because customers will still want to continue to engage that way. As we say, we are driven by what the customer needs from us, not what we think the customer needs, right? So they will vote on their feet by giving us the business when they find that it is the right channel, the right time, and the right engagement model for them.
Thank you. I'm conscious of time, but I want to try and cover off as much as we can the last bullet point in the agenda, which is banks' partnerships with fintechs. And it would have seemed incredible to me, John, that when I started out covering banking more than 15 years ago, that an outfit could be spun out of an incumbent bank and then years later is actually working with 150 other banks. That, I think, is still, even today, a phenomenal achievement. How is the culture of banks evolving to enable perhaps rival banks to Union Bank to work with UBX?
Yeah. Well, I'll I really like how you framed the question, and if I could even rewind the tape a little bit, I think there was a point in history where the fintechs were coming and they were going to eat the bank's lunch, right? That's where it was heading. And I think what's evolved is, I think the first thing that evolved was, well, hold on a second. The fintechs might have the mindset, they might have the tech, they might have the critical along the lines of what Ken has been getting at through a lot of what he's shared. The fintechs, by nature, might have a fundamental focus on the user experience and the customer journey in a digital channel. But the banks still have very difficult to replicate capabilities. We've talked about trust, but the banks also have the traditional banks have traditionally or historically had large financial service customer bases, right? And so there is a natural synergy actually between the incumbent banks in the fintech. So I think the first evolution was partnership.
Yep.
I think the next evolution was, maybe to be even a bit provocative here, acquisition. I think the reality is that in many cases, not all cases, because there's been some fantastically successful fintechs, but I think the next evolution was a realization that, based in large measure on what I just shared, that the banks could actually acquire the fintechs probably faster than they could acquire customers. And so that takes partnership to the next level, where the incumbent banks are ingesting this capability, this talent, this UX focused mindset, digital mindset into the organization. And I guess, and now to get to how you frame the question, for us, the next evolution is, well, can the bank itself not only become a fintech, but spin out a fintech or a series of fintechs? So can we, from all of those difficult to replicate capabilities, can we actually spin out financial technology that can be obviously leveraged by the institution from which we've been spun out, but other financial institutions? And and that's one of the reasons why we spun it out. We wanted to make sure that we were recognized for our heritage, our affinity to our parent bank brand, for all of the reasons that we've discussed. But at the same time, we wanted to make sure that we could provide our capabilities to other financial service providers. We truly believe, or at least the bet that we are making, is that the future of banking will become more and more invisible and embedded. And in that respect, we need to truly aggregate and virtualize the financial services, not just of one institution, but of many institutions, so that we can participate in either the platforms that we're building or the platforms of others. So yeah, and I guess again, proof is in the pudding. Our eye-to-eye platform, our banking as a service platform, we have over 150 financial institutions signed up at this point. We have a lending platform where we aggregate and we virtualize lending for the SME segment. It's called SEECAP, SEEKCAP.ph. You can actually go to the online marketplace if you want. But but the platform underneath that is actually embeddable into anyone's channel. And to date, we have 10 lenders that are signed up and represented on the platform. And of course, the 150 banks on our banking as a service platform are at this point now plugged in and connected, and when they're ready, they can participate in that as well. And I guess I'll just finish on, you know, the funny thing about platforms is they're multi-sided, and I talked about our multi-lender platform, and now the financial institutions on our banking as a service platform can participate there, but you can also flip it around. A lot of these smaller financial institutions have lending expertise in a particular type of lending, because, you know, they're only so big. So for example, they might be very good at real estate, like mortgages or real estate lending, but they might not know very much about automotive or motorcycle lending. Yeah. Now they can tap into a lender on our platform that has, for example, a vehicle or motorcycle lending capability. And instead of turning their customer away, they can actually leverage their knowledge of the customer to offer and sell the lending product of another financial institution. And everyone wins. They win because they retain the customer relationship. The financial institution or lender that specializes in, let's say, motorcycle lending wins because they get access to a customer that they might not have had access to in the past. And of course, most importantly, the customer wins, because more than likely, by leveraging that, they're going to get the product they need at a price that reflects their relationship with the lender that they do know, or the bank that they do know.
And you know what? In the 15, 20 years I've been looking at this, one thing hasn't changed. New bank, incumbent bank, emerging market or mature market, you've got to compete in price and you've got to compete in service. And that hasn't changed, and I don't see that changing.
Yeah, absolutely. Absolutely. And I guess what I've described is our way of, you know, to your point, if you want to kind of, you know, strip it of all the fancy digital and platform language, it really does come down to that. We are leveraging the technology. We are leveraging how we've set up our entity to be associated with, but stand alone from our parent brand. And we've done that so that we have a means of providing a level of service that you know, otherwise, at least we feel, didn't exist in the market. And obviously the example I gave is a perfect example of where you can drive down price. You know, otherwise, well, you know what they say, there's no bad risks, there's only bad rates, right? So the alternative is, yeah, they can get that loan somewhere, but they're going to pay through the nose for it. And obviously we want to avoid that.
Gentlemen, time has flown by, which I think is a great sign. It's always positive if the time has shot by. I'm sorry that we've had the technical challenge with Michellina, who obviously hasn't been able to join, but Ken and John, you have done us proud, so thank you. It's now time for the virtual lunch break. Take the opportunity, please, to network with your peers online. We'll have the next set of winners revealed on the third stage on the website, the awards section, and I'll be back in 30 minutes at 1:15 Singapore time with one of the stars of global retail banking, Siew Sarkar from Emirates NBD. But meantime, thank you to John, and thank you to Ken.
Thanks, Doug.